We are talking with Dan O'Brien, president of Futrum, here looking at Texas, which is to the downside, issued weak guidance. We did see revenue on the rise. What were your takeaways?
Yeah, let's see. I mean, results were kind of largely in line, about $100 million beat on the top line, missed by a penny on the bottom line. I think the stock reaction is really picking up on the guide here, right? We saw kind of an incrementally, weaker outlook, a little bit of margin concern there. And I think, just a bit of a tough comp for, the analog semiconductor bellwether against a red hot semiconductor market in the data center space. We're just not seeing, the same type of demand uplift coming off the bottom that we are in the analog industrial and automotive sectors as we are in AI.
Yeah, let's get into that, because we think about AI and the wave of AI and Nvidia and some of the other names. Is Texas Instruments paling or not keeping up with the rest because of the exposure they have? You were just talking about that a little bit. Could you explain?
Yeah, absolutely. I mean, certainly TI's, got a growing data center business, but, overall exposure to there for them is probably 10-15% of revenue. The majority of their exposure continues to be off of kind of broader macroeconomic trends, right? The analog industrial microcontroller type of segments that sell into, a variety of goods across a variety of industries. So, I think their consumer business has gotten a little bit of uplift from Apple, consumer ex Apple, probably a little bit weaker. But the more analog industrial automotive sectors, not really seeing the same level of growth.
So why is it more of a more essential builder? We think about the industrial company and that kind of idea when it comes to Texas Instruments. It's a little different than the rest of the AI names.
Yeah, absolutely. I think those tend to follow kind of broader macroeconomic patterns. And, I think as we look at the macroeconomy, it's quite healthy, but there's certainly a big AI uplift there. And as you peel back the AI infrastructure build out, you do have a little bit of a softer trend there. I think there's some positive news in that, they do seem to have found the bottom on the inventory burn down, not necessarily a big rebuild coming out of the customer base, but, I think the worst of the inventory drawdown is behind them. I think that longer term, they've got a really nice story around, kind of their cost containment, moving to this big 300 millimeter fab build out in Sherman, Texas. Near term, probably a little bit more margin concern, but, this is a company that thinks in decades. Managing quarter to quarter, a little bit tougher.
As a matter of fact, Corey Johnson had sent a note about how the average life and that it's 20 years, a part designed in 2024 could still ship in 2024, could still ship in 2044. Does that matter?
Yeah, absolutely. I mean, you look at somebody like an Nvidia, and their main customers are going to be upgrading on the latest parts every year. TI really builds a catalog of parts that have very long shelf life. They will generally manufacture those in runs to kind of manage their loadings across the fabs. Just a very different business.
Yeah. And what in AI overall at Futrum, what are some of the names that you think are really leading the course, will continue to be leaders? People should continue to watch the stocks of these names. Which names are you watching most closely right now?
Well, certainly ASML and some of its peers on the semi-cap equipment side, like Lam Research, Applied Materials. All of this build out is going to take an enormous amount of new fab capacity, and those fabs are going to need to be filled with leading edge equipment. So, I think that group there will continue to benefit. Certainly TSMC on the fab side of things is going to continue to be, really almost a monopolistic player in that space. And then, down at the fabless level, Nvidia, Broadcom, those are the names that we're really looking at as, primarily benefiting from this massive AI infrastructure build out that we're seeing.
How important is it that Taiwan Semi and Nvidia built the first chip here in the U.S., for the first time now, looking at the Blackwell chip? I guess it's really changing the dynamic at this point.
It is. It's certainly a meaningful milestone, and I think it will really help them continue to accelerate the Blackwell ramp. Having said that, they're manufacturing the wafer here. That wafer still needs to get shipped back to Taiwan, where all of the advanced packaging capacity looks like, the chip on wafer on substrate, the CoWoS chip packaging, that continues to be a supply chain bottleneck. And, that will be a little while before we're actually getting that advanced packaging here.
And the prices to do all this double and double and double and double. And we think about the cost of data centers and electricity and how it costs so much to move AI to each level that it gets to. But at this point now, we've seen a lot of cyclicality of I'll give you money, you give me money. And it's different because it's not venture capital giving the money and saying I expect a return on investment. It's sort of a lot more in theory, is it?
Yeah, I mean, I think that's what's different about this big infrastructure build out versus some of the comparisons folks are driving, back to the internet boom is, most of this build out is being financed by the free cash flow of the most dominant companies on earth, right? The hyperscaler group, Nvidia itself. I think, more recently we've seen some more interesting funding, kind of mechanisms. It's not just a cash for chips play. There's equity deals like what you got with OpenAI and AMD. You have Nvidia, kind of helping people build out the sites, and they're still paying for the chips. So, I do think it's a lot different than what we've seen in the past. This is largely being funded, as I said, by really healthy companies and effectively investing their current free cash flow for a, greater return on their longer term free cash flow.
Dan O'Brien, thank you.